So you add these like these due diligence lists, like how long it's been, like because everything you add is avoiding a dragon that is going to mitigate the risk in the acquisition. Now you will pay more for that because that risk has been moved out of it, but it's worth paying for.
Hey, welcome back to another episode of Angels, Exits, Acquisitions. I'm your host, Jeff Barnes, and this is Angel Investors Network's podcast for entrepreneurs, investors, business owners who are thinking about investing in, buying, exiting, or doing anything with scaling up a business for even an IPO, right? And I'm really excited about this interview. I know I'm excited about all of them. I probably say that too often, but the fact is I'm interviewing one of my friends and partners, John Stoddard, and we're going to be talking about acquiring businesses, but we're going to be talking about the keys to being successful in acquiring an existing small, medium-sized business and how you can add that into your portfolio and some of the steps, but more importantly, the things that are required for you as an individual before you go down that path of actually buying a business. And so I'm really excited to hear what your thoughts are on this. So as always, give us a thumbs up, share this podcast with somebody you think needs to hear it. And hey, let's make this world a better place through Angels, Exits, and Acquisitions. Take care.
Welcome to Angels, Exits, and Acquisitions, the place to learn how to fund, scale, exit, and massively profit as an angel investor or entrepreneur. Brought to you by the Angel Investors Network. And now, here's your host, Jeff Barnes.
All right, welcome back to another episode of Angels, Exits, and Acquisitions. I'm your host, as always, Jeff Barnes. John, I'm with John Stoddard today. And John, how are you doing?
I'm doing great. Thanks for having me, Jeff.
Absolutely. So John and I worked together on a couple of projects here. We were actually just talking right before we came on here about a deal that we're looking at. So John, I'm really excited to talk to folks today about the acquisition side of Angels, Exits, and Acquisitions and what you've been doing and the things that we're looking at and we're working on together. So why don't you tell everybody a little bit about yourself?
Sure. I'm John Stoddard. I am also a fellow veteran, Air Force a long time ago. It actually paid for my college that I went to NAU, 100% paid for it with a V program, engineering. And then for the last 20 plus years, worked at technology companies, software companies. And then I bought a company, shut it down. And then I bought another company and then ran that for 6 years, sold that in Empire Flippers. And I own part of a third, and I just launched a business to help people buy businesses. I'll act as your coach, expert coach, to help you get over those humps, those limiting beliefs. And I also joined, along with you, a little private equity company called Patriot Growth Capital just recently. Yeah.
Just recently, yep. And we're still really excited about getting this thing going. It's fine. We're still having all these conversations that I'd imagine you have with your students all the time, which is, what do you want to do? Where do you want to go? What's the important point for you? And what's even the point of doing this for you? And then you tailor that into buy boxes and so on. So, why don't you tell folks, like you said, you bought a few businesses, you've exited businesses, you've started businesses, and thank you again for your service, even though it was the Air Force. I won't hold that too much against you.
It's not the Space Force.
This is true. Yep. But yeah, how many deals have you done throughout your career now?
It's over 20 involved in. Now, I am not like the sole driver sponsor for the deals. I, as part of a team I've been involved with.
Well, I think that's one of the most important things for people to take away is that you don't do this in a vacuum. You don't do it by yourself. So what kind of deals do you look at on a general basis?
So with the deal flow system, the coaching system, most of my students are SMB buyers, but we want to look a little bit bigger. Companies, maybe 500,000, 750 EBITDA, start there. And we're looking for longevity too, right? If we see a business that's over 10 years old, that means that a lot of the risk is mitigated out of the business. So we're looking for something with 500, 750,000 EBITDA, 10 years old. That's kind of perfectly what we're looking for. And it really doesn't matter what the niche is, except as long as it's a need versus kind of a want. Wants are here today, gone tomorrow.
Okay, so if I unpack in that, first off, longevity, right? He said that covers a lot of the hurdles because, hey, if the business has been around 5 years, 10 years, pretty good chance it'll be around 5, 10 years from now.
Exactly.
And I think a lot of folks miss that one really key differentiator because if you're going to go ahead and acquire a business, small business, it sounds great if this company's doing $1 million a year in revenue and 500K in EBITDA or STE. But if it's only been around for 3 years, maybe it hasn't weathered any growth storms yet, right?
Yeah.
Or maybe it was riding on the coattails of a good economy for a little while, or who knows what the situation is, right?
Yeah.
But after about 10 years, you've seen some cycles. And those cycles really tell you whether or not the business is going to stick around.
Yeah, exactly. I'll bring up a company you and I looked at. It's called it's for a dog product, pet product called Muddy Mats, and it's phenomenal growth over 3 years. But it's only one product, and it's only been around 3 years, and the product comes from China. That looks great because it's thrown off fantastic numbers, top line, bottom line. But will it be here tomorrow? Will 10 other competitors see what we're doing there and go, just copy it and change it just a tiny bit and go into business? Will Amazon, who knows exactly what our numbers are, go, you know what? I like that product. We're going to start competing with that.
Right. Yeah. And these are all risk factors that people need to think about. So, but before we dive too deep in all this stuff, what made you want to start going into business acquisitions in the first place?
Yeah, it's a roundabout way. I got to tell you, my first acquisition was a long, long, long time ago when I was in high school. I bought a calf for $90 at an auction. I grew up in a ranching town, Wilcox, Arizona, and then just put it out in the herd. And 2 to 3 years later, it's a 2,000-pound bull and sold it.
There you go. That's an interesting acquisition opportunity right there.
That was the first one. Yeah. Now, then I went to the W-2 way, then came back and did some acquisitions. I went back to where my roots started from. Yeah.
So it was always just a drive for you to say, hey, I mean, it's kind of funny. You were in the Air Force. You were definitely not your own boss in the Air Force.
Yeah.
And you were in the corporate world for a little while. And then came back to, was it just like this gut feeling like I need to be in charge of my own destiny? Was it, because of cash flow, because you wanted money, or what was the...
Yeah, I'll tell you, when I was the reason I went in the Air Force was because my dad did it and my brother did it. And I didn't see any other avenue when you're growing up in a town in Wilcox, Arizona with one stoplight. You just didn't see any other avenues. So I did that. And then I realized I didn't like taking orders from guys that I just didn't make sense to me, and doing the same thing over. There was no questions, nothing. I just had more curiosity. But it did pay for my college. And then I, whole bunch of years in tech and doing it. And then one day I was sitting into it, just going, I'm kind of tired of this. I'm kind of tired of just doing the same thing over. And I'm going to put my money where my mouth is and go run, buy a business and see what it's like. I want the experience. I didn't want to die with regret.
That's awesome. So that's kind of interesting, right? Because a lot of folks will say, I'm sick and tired of this. I want to go do my own thing. I should just go start a business, right?
Yeah.
Doing the thing I already know how to do, the typical Michael Gerber E-Myth situation. But you went and said, no, I want to own a business. So was there somebody you were listening to, somebody you were talking to that's made you think buy versus build?
Well, I should probably add some history into there. When I was working at Digimation, a software company, I actually did co-founded a company called TurboSquid. It was VC funded. Intel and Vantage Capital put $5 million in it. And it was a startup. It was a typical startup. But it was like, hey, we got this great company. Let's launch. And then crickets, right? We had a whole bunch it was a marketplace. We had a whole bunch of products to sell, 3D assets to animators, but we didn't have customers because customers didn't understand it. It wasn't until 2 to 3 years later that we actually started seeing some cash flow. Startups are really, really hard.
Yeah, they are.
So I've done a couple and have been involved, and I just said, it's just too hard to bring all the components together out of zero and make it work to something, for me anyway. And I did some pitch decks where a lot of people paid me because I raised the money from Intel. I created the pitch deck for Intel and they put $5 million, and people started paying me for that. But I saw so many people just going, oh man, this is not going to work, dude. You don't have any customers. You don't have a TAM. You don't have a need. You don't have any people buying. You don't have any interest. It's not going to work.
Right.
Yeah.
And I think that's such a important point to make, which is you went through arguably one of the hardest things people do, right? Less than 1% of companies that ever start up go to raise capital, right? And I think most people don't realize that. Less than 1% of all companies that have ever started raise capital. Less than 0.15% ever raise over $1 million. Okay?
Yeah.
And putting that out, that means 99.85% of companies never do what you did and what you accomplished. And that's not just like per year, that's ever, right? And the number is probably even lower than that, as far less than 0.15%. But then you look at that and say, did all that, you raised $5 million and it was still hard, right?
Yeah.
And a lot of folks that are, going down the startup route, they say, well, if I just get $1 million, if I just get 5 million, if I just get 10 million, or some of them will say, if I just had $100,000, life will be easier, right?
Yeah.
And I can't tell you how many times that we've heard that, seen that, and watched it happen, and still watch the company fail. The most recent ones in memory are Fast Inc., $125 million bankrupt within 12 months.
Yeah.
And then another one, which is interesting, is Thrasio, which was actually an FBA, Amazon FBA aggregator roll-up strategy. I can't remember if it was $1 billion or $2 billion or how many billions they raised, but they declared bankruptcy as well within about 24 months of raising that much money. So, I think that going through that process really sets the stage for, okay, now I know what I don't want to do.
Yeah.
And then you went through and you worked in corporate and you found another thing I don't want to do. I bring this up because it parallels a lot of the things I've experienced, which is I had this idea and this notion of all these things I wanted to do when I was younger. And then I started doing them. I realized, man, that's not really what I want to do in life. And I'm curious if that's kind of how it happened to you too.
Yeah, it is. It's just, I wanted, as I grow older, it's just like, I wanted to stay curious and do things, even though you're still attached to this, I have to make money. But if you're trying to solve problems that people need a solution to, they'll pay you money. So you have to, and that was kind of the startup world, right? I saw so many people were trying to start something that people didn't need their products. There wasn't a burning desire to get paid for them. Like, oh, if I only had money, I'd prove you how it worked. Like, show me, do you have one customer? Do you have 100? Right. Do you have 1,000? If you can't answer those questions, man, you're going to be fighting the status quo.
Yeah. And you don't have an actual business, right? Which we talk about, like there's the cash flow quadrant from Robert Kiyosaki. And, the idea of a business is that you want to put profit into, the shareholders, right? And if you're the business owner, you're the sole shareholder, right? So, the whole idea of I'm going to go into business for myself because I'm sick and tired of working for the man. Well, that doesn't always work out because, like you just said, if you can't even get customers, you don't really have a business.
You don't have a business.
You bought yourself a job, or you created a job for yourself that doesn't pay, right? So I'm with you, man. Like, even though I help a number of startups, we help companies get going all the time. We caution them that there's a long way to profitability and that exit that they all think they're going to have. And I'm guessing this is what's played a pivotal role in your buy box, if we will.
Well, it was just the fact that I wasn't going to be on the planet long enough to figure out what customers wanted and needed before they paid me for it. Why don't I just leapfrog like Warren Buffett does and buy a business that already has proved that?
Yeah, absolutely. And so let's talk about that a little bit, going into this business acquisition mode. Like you said, SMBs, so small, medium-sized businesses that are out there, private companies, mostly Main Street, I'm assuming, or do you do that with online?
Well, my second business that I purchased and I ran for 5-6 years was an online business. It was an e-commerce business selling hearing aids online.
Before continuing, please subscribe and share this video to help us reach more people and stay notified of our latest releases. Now, let's continue watching and learning.
Yeah.
Yeah.
Okay. And so taking advantage of the global digital market space out there, which is incredible. And you also mentioned it has to be in business for roughly 10 years or more. And how do you find these businesses in the first place?
Yeah. So let me talk to you about that. Now, the hearing aid e-commerce business was around 5 years or more, which was a reason that that's added to my due diligence list in the future.
Funny how that works out, huh?
Yeah. It's like, I'm not going to be on the planet long enough to keep making these mistakes, right? Until I get to a point where I want to be.
I like that.
Yeah. So you add these like these due diligence lists, like how long it's been, like because everything you add is avoiding a dragon that is going to mitigate the risk in the acquisition. Now you will pay more for that because that risk has been moved out of it, but it's worth paying for.
Yeah, I think essentially you're buying something that is going to have the cash flow, right? And you're buying yourself past the headache. I think that's a really important distinction is that you can like just by like buying a home, you can go out there and buy a fixer, right? You can buy a dilapidated house that's worth 50% of what it could be worth, and you can get it for a steal. But you bought a whole bunch of headaches. And if I'm reading you right, what you're saying is I don't like buying headaches.
I don't like buying headaches. And there's always the unknown stuff with buying a rehab house. It's just sometimes you just don't look under the hood. You don't know if the entire plumbing, which is under the concrete of the pool, is bad. You don't know. Yeah.
Yeah. Yeah. Well, so give us an example. Have you ever had that happen in the process of buying a business?
Yeah. So I'll tell you the hearing aid business. I thought I was pretty smart buying a e-commerce business that had pretty good cash flow. That I didn't do enough due diligence on, probably because I was naive or just arrogant to think, I'm going to do this on my own or I don't need anybody else. And sometimes you do get that. You're like, I'm going to keep charging ahead and make my mistakes and learn from them and move on. I could see that's how I rationalize it today. But I didn't do enough due diligence on that. I found out the guy was inflating his cash flow by not offering returns within the 30, 60, 90 days. And what I
Wow.
didn't see was people were complaining on some of those sites, like, hey, don't buy from this company because he's not giving us returns. And then I reached out to these online companies, like, how do I get these complaints taken off? And it was one of those companies where you have to pay $10,000 to get it taken off. Like, all right, well, I don't want to do that. And that was there was a two-pronged process. How do I fix the reputation problem of the business, which I didn't want to buy? To how do I owed this seller still money from the earnout or seller financing, whatever you want to call it, and go, look, there's some problems with this business. I don't want to pay for it. That's the legal side. So I had to fix the reputation problem and I had to fix the legal problem side where I overpaid for it, which he didn't reveal to me. He wasn't
And
very
these are things
transparent.
you generally can't learn unless you have an incredible team or you make the mistakes yourselves, right?
Yeah.
Like it's even hard to go to a seminar or a training or watch a webinar on this stuff and learn these things. You just don't even know the questions to ask. And especially when you're younger or like you said, your first deal and you're like, I've done that myself, right? I'm arrogant. I'm a smart guy. I can figure this stuff out. I'll just keep pushing through. That's not a big deal. And it turns out, oh crap, this is a way bigger issue than I thought it was going to be. And I hate it when that happens because it's like somebody's sitting there saying, I told you so.
It was like Will Ferrell jumping into the bear den. You immediately grabbed my decision.
Exactly right. And it's one of those challenging things because you get so excited about the opportunity at the end of the rainbow, right?
Yeah.
And whether it's a guru that explained it to you or you read it in a book or you saw somebody else do it, it's like, oh man, I can do that too. I'm smarter than them. And I hear unsuccessful, or I shouldn't say unsuccessful, but less than successful people say this all the time. I'm so smart. Why can't I figure out that thing that guy did? Because that guy is not very smart.
Yeah.
And I'm curious what your reply to that is.
A lot of it sometimes is your perspective, and your ego gets in the way for a lot of this. Like either you're too far away from the solution or you're too close. And a lot of owners trying to run a business, and they, the small businesses, and they're too close to see what the problem is.
Then,
And at that time, I like, how do I solve the reputation problem? I started reaching out to everybody I knew that had kind of a problem. And I saw one guy out of the Northeast that built a pool company to a $15 million pool company by just doing podcasts and answering questions. And which he said, hey, inbound content marketing. That's how you solve this problem. I reached out to him and talked about that. I bought his courses or his book. And many, many years later, I have to add, I got him on my podcast to ask him, talk to him about that and thank him. And
That's
he
awesome.
just said, here's how you solve the problem with people complaining on your website. You just create a whole bunch of content where it moves everything down on the SEO.
Right.
Which I did.
Yep.
I created all kinds of videos, how-tos, etc.
And, that whole notion that there's so many of these people looking out there and saying, well, why can't I achieve this level of success like that guy or gal out there? I think a lot of it is ego. And our egos get in the way. And sometimes our egos make us do things that are really, really dumb, really naive. And like you said, in hindsight, you can look back, hindsight's always 20/20, right? I can say, okay, I shouldn't have made that mistake, or I jumped the gun, or I didn't do due diligence, which you've talked about a lot already, which is, it's one thing to buy a company, but it's a lot harder than a lot of people think because of this thing called due diligence. So can you walk us through a little bit about what that means to you?
Yeah. So due diligence is, just trying to figure out what really is true about the company. And that includes the financial report cards.
Yeah.
Warren Buffett's famous for saying this. It's like the language of business is accounting. And if you don't know accounting, you can't tell the winners from the losers. You don't know what the score is. So you really have to have a good idea of, what the income statement says, what the balance sheet says, what the cash flow statement. That's the report cards. That's whether you could tell a student, your son, your daughter is doing well in school or not.
Right.
But there's so much to unpack with accounting. That's why they have CFOs, why they have CPAs, accountants, bookkeepers. The income statement only tells you a quarter of what's going on. And sometimes that's not really telling the real truth, because if I look at an income statement and the profit says $2 million, well, that net profit is actually a theory. If you're on accrual accounting, that $2 million is just a theory. Doesn't mean you're making that kind of cash. That's a third, let's say 33% of the story. Then I got to go to the balance sheet. Like, how much debt is being used, or what's the accounts receivable, or what's the cash in the bank? I've seen a lot of people with the income statement that's look fantastic, but I get to the balance sheet and it's got zero cash. Like, okay, that's a business that's cash strapped to try to create those sales. The whole job of business is turn assets into cash flow. And how well you do it is on the balance sheet. They could have a ton of accounts receivable, or they could have a ton of debt on it to create those sales.
Right. Yeah, these are really important points, right? Like, understanding what you're looking at even is so important. So if you're looking at a deal, getting access to, you said three things: profit loss statement, the cash flow statements, and the balance sheet. And knowing how to read those is really important.
Yeah, and I would gather to say, which is my opinion, is the balance sheet is probably the most important one. I'd prefer to see the balance sheet before I see the income statement, because I could see what the real net income is on a balance books balance sheet.
Right. Well, that's another side topic altogether, is a balanced books, right? If you actually have these people that know what reconciliation is and doing their year-end financials and all of that. I think one of the things, I want to go back to this really quickly, which is the idea of success, right? A lot of people might hear this, they might hear about your success, they might hear about anybody else, and they say, well, I want to do that. And they're going to say, I'm a smart person, I'm going to jump in. If they can figure it out, I can figure it out, right? And given all the stuff you just talked about, the due diligence and reviewing this stuff, they might say, okay, well, I'm going to go learn this thing, I'm going to go do this thing. But I think the real key to success is admitting that you don't know everything and knowing how to build a team around you that does.
I'd agree with that. And I have proof. It's not an anecdotal, it's proof. It's the people. I coach business people to buy business, and the people that buy the courses don't buy businesses just alone. They become shelfware. I can go in and see how much of the course they finished. It
Right.
becomes shelfware. I've sold thousands of those, but the people that hire me for coaching, they all have LOIs and they have all closed businesses.
Yep. It's a big difference between what I would call them the entrepreneurs, right?
Yeah.
They want to be an entrepreneur. They love the idea versus the people that are willing to roll up their sleeves and do the work. But again, going back to building the team. And so when you talk about coaching, that's the mentor side of things, right? Like everybody should have.
Yeah. I agree. It's like, and I brought up this, there's an OG in this business. His name's Richard Parker, cool guy. I've known him 20 years. I bought his How to Buy a Business course probably 20 years ago. And it's one of the reasons I got into buying businesses. And I just had a conversation with these. Like, people buy a course, it becomes shelfware. But if they hire the coach and that they're serious, they're going to be held accountable, right?
Yep.
But they're also going to come back to you and just go, I have these kind of silly questions about the supplier and getting the numbers from the broker. And I go, well, you just tell the broker it's open kimono time. Tell the seller it's time to open the kimono and share what those numbers are. That's all you have to do. She already knew the answer, what to do, but she just needed help to push her.
Right.
Some little limiting belief, like maybe I don't know what I don't know, so maybe I should go ask how to approach this.
And so what do you feel is the biggest detriment to people that want to do this? Like, what is the thing that holds them back from actually succeeding? If they have the coaching and the training and the know-how, and let's just say we know that mentally their faculties are all there, what is the thing that's preventing those people from being successful?
Well, I think, it's a couple of things. And you could compartmentalize some of them. Like, some people are W-2s and they're very comfortable with the insurance that the company provides, the stable paycheck, and the feedback or the input from the wife or the husband, whoever's the moneymaker, right? You have to get buy-in by all parties, and you have to go, I got to cross the Rubicon tomorrow, and for 6 months, maybe we won't get a paycheck because I don't know what that's going to look like.
Right.
Like, not a lot of people want to take that leap. And then
That's a huge one.
then there's the person that just keeps looking for the perfect business, but realizes, if I try to tell them there's no perfect business, you just have to understand and manage the risk that you do see. There's that person. And it kind of runs the gamut of all of different types. Like, why don't I do it? I know all the coaches out there, Walker Diebel, Michael Byers, Dan Pena, Carl Allen. I've had them on my podcast. And they'll tell you the same thing. Like, less than 5% of people that ever sign up for a course ever buy a business.
Yeah. Well, I think it comes down to fear, right?
Yeah.
And it's not even not knowing, right? I found this to be really, really true of me, is that when I was in the Navy, I was reading books all the time about business and entrepreneurship and money and all these different things. And I would go to the seminars, I'd go to the courses, and I'd even get a little bit of the coaching from time to time when I could afford it. And I remember still having panic attacks thinking about going and talking to somebody about raising money, or going to talk to somebody about selling their house to me on a subject to financing or something like that. And it became this issue of confidence, right? And not knowing if I could actually pull this off, like knowing all the steps and all the things, because I read it all and I've spent plenty of time studying it, and I was listening to things on the car all the time. But now it was like, crap, now I actually have to. And because at the end of the day, nothing matters if you don't execute, right?
Yeah.
And I think there's a massive fear. There's a big block for a lot of people that is, will I really be able to pull this off at the end of the day? Whether that's starting a business, whether that's buying a business, whether that's exiting a business, I think there's this massive fear, this wall that they foresee or perceive in front of them that prevents them from just charging ahead.
Yeah, and I don't know if that's sometimes can be figured out beforehand. Like, can you sit around and contemplate, well, am I going to be able to execute on this? And I'll give you an example. I had a guy reach out to me who was a searcher. He was funded by a search fund. And he said, do you know any businesses? He reached out to me and goes, hey, I need help finding business. I go, well, tell me what's going on. And I'm like, I got to probably return $100,000 to the search fund. Oh, well, what do you mean? Well, I've come to my 2-year end of the period and I haven't found any business. Well, how many have you looked for? 1,465. So you've looked at 1,465 businesses and you haven't found one that you could purchase. So that tells me he's not going to buy a business.
Right.
He wants to be an employee and done it for. Because he either hasn't set up the skills and the experience in his lifetime to be able to gain the confidence to be able to purchase it and go to that next level.
And that's it's such an insightful thing to think about, right? Because do you know yourself well enough to know if this is going to be something you can do in the beginning? And I would say that there's a couple of factors that might lead into that. One is going to be age, right? If we're young enough and naive enough to think we can do it, then we probably will. But I think the other thing is looking at your track record and just in your own personal life. When there's opportunity that have come your way, even though they might have seemed like you were punching above your weight class, for instance, did you go after it still? And if you can't look at yourself objectively, and say, that's not me, then you're probably going to find out the hard way, right?
Yeah. And that's okay, but you have to want to put yourself in those scenarios where you learn, right?
Yeah.
Can I do it or can I not do it? Like you actually have to take the reps and the shot. I mean, I'll tell you a story. If you remember Ross Perot, he's the billionaire oil guy that actually ran for president, split the vote,
Yeah,
and helped
92, I'm not mistaken.
if Clinton got voted. But he tells a story where there was one part of Houston to sell newspapers that nobody wanted the route. And here's a guy that's 5'6", 125 pounds. He goes, I'll do it. And he killed it. I mean, he killed it. He put himself in the situation where he knocked on doors in a low income neighborhood in Houston and just kept doing it and sold a ton of papers and then kept moving up. You have to want to be able to test your skills.
Yeah, your why has to be big enough, right, to overcome those fears and be able to scale that wall. And I think the other way that I look at this too is that a lot of folks who stop and eventually quit and they turn back, one, their why is probably not big enough, like why they want to do this in the first place. It wasn't strong enough to keep them going. But more importantly, they didn't shore up their weaknesses with somebody else, right? Instead, they tried to overcome their weaknesses. And I use those words intentionally because when I think about shoring up your weaknesses, you think about the levee against the ocean, the river, whatever, the lake, and you have to reinforce that levee. Well, the levee can only do so much by itself. But as soon as you start shoring up and you start putting the barricades and everything behind that, which in the analogy would be the people around you, pushing you from behind and helping you and supporting you, that's different than just trying to overcome your weaknesses by learning how to fix you as a person. Yeah. And I think those are the people that fail the most, the ones that are trying to fix themselves versus fight other people's.
Yeah. But I want to go back to the why part and I just tell you a story. I had one of my students that is now closing on a business, but a couple months ago, she reached out to me and she was really laboring on the financials. Like, even though that the cash flow covered her and her husband's salary, that who was going to quit and run the business with her, they were just so nervous about making the leap. Sure. And I said, Lenny, let's go back, take a step back and ask why we're doing this. Is it for just cash flow covering it? Or is it, do you want to buy time and take your son in the middle of the day to the park?
Yeah.
Yeah. And she goes, yeah, you're right. I want to buy time. I want to buy my son's time. I want to have control over that. And that's the why that you have to keep centered on why you're doing it so that, when you're moving forward and you go, what skills do I need? Or who has those skills that can help me accomplish that?
It's so important to keep that in mind all of the time, right? And most people, they say that something like 95% of our thoughts every single day are negative, right? And it's all the bad stuff, or it's just, busy stuff that's going on inside of our mind versus the person that's saying, I want this, and here's why I want this. And no matter what happens, I'm going to keep pushing forward. Yeah, I know there's going to be setbacks. I know there's things that are going to happen, but I'm going to keep thinking about the goal in mind, keeping the goal in mind, right?
Yeah.
I think that's such an important point to keep in mind.
Yeah, in the Japanese, you can see those the little trees they do. They're always pruning the trees. That is a bonsai tree, a form of keeping the negative thoughts out of your mind. Like you have a garden, you have to clean the garden weeds, and as immediately you think about negative thoughts, do whatever you can to remove those negative thoughts. You don't want them to grab hold and grab roots, right? Is it a prayer? Is it working out? Is it cooking? Whatever it is, you can't let those negative thoughts grab roots.
And with that, I think we're going to end on that. That's such an important point, and I really appreciate it. I know we're talking about acquisitions here, and there's probably a lot of folks are wondering, like, okay, well, but how do I actually do it? Right?
Yeah.
So in that case, they're going to have to reach out to you, John. So how do they find you online?
Yeah, so you can start by seeing all the episodes I've created. I've interviewed over 150 serial acquirers. You can find my podcast on Top M&A Entrepreneurs on YouTube. If you're interested in my courses and my coaching, my group coaching, just go to dealflowsystem.net.
Beautiful. All right, we'll have all that information in the show notes. John, thanks so much. It's been a treat. Really love working with you and talking about all this stuff. And of course, we could talk for days on all of this stuff, but I think people will find your links for your podcast in the show notes and your link to your business and be able to follow you there.
Thanks for having me on the show, Jeff.
Absolutely appreciate it. And you've been watching Angels, Exits, and Acquisitions with Jeff Barnes and today, John Stoddard. And as always, like, subscribe, and share. And we look forward to seeing you on the next episode. Take care.